Manufacturing output came in lower than expected in June, with the industry now expected to weigh down GDP in the second quarter. According to data from Statistics South Africa, output rose 12.5% year-on-year in June, and that's below expectations for an increase of 14.7%, as CGTN's Sumitra Nydoo reports.
According to Stats South Africa, seasonally adjusted manufacturing production fell 0.7% year-on-year in June. It follows a 2% contraction in May and a 1.4% drop in April.
I think for those of us who are close to the industry, we're seeing that as more or less like a stabilization in terms of the production patterns. The context is in the sense that last year was not a normal year in terms of the heavy lockdown which transpired. If you look back in the figures, for instance, you will see that from the month of March to April this year, if you compare year on year to last year,
the data showed improvements in metals, engineering products and furniture. However, there were declines in chemical production.
In June, overall output was down by 0.7%, but we saw, for instance, output in basic steel and also the motor vehicle sector expanding for the year as a whole, i.e. on a 12-month basis. Those two sectors also did perform quite reasonably, showing strong growth in double digits.
Experts are concerned, though, that these lower figures came in before the social unrest unfolded in Gauteng and KwaZulu-Natal last month, which suggests the industry is still facing challenges around electricity supply and load shedding. A third wave of COVID also slowed activity.
What is more clear is that the challenges in the economy from the point of view of energy supply still exist, even though we're seeing improvement in terms of the production patterns. The issue of imports into the economy still exists currently. The challenges the industry is facing from the logistical cost point of view, it's also something that is still existing in the economy.
July production is also likely to be impacted, but economists believe there will be a strong bounce back towards year-end.
I expect manufacturing activity to gain momentum towards the end of the year. In June, we're talking about the effect of the unrest which disrupted the supply chains, from the ports up to the major routes, i.e. the N3 bringing goods inland, and also destruction of some warehouses.
South Africa is still on COVID alert level 3, which is keeping production down to 80%. Sumitra Nydoo, CGTN, Johannesburg, South Africa.